Good morning and welcome to the Trading.com weekly update. And with me again is Peter Maguire. Good morning, Peter.
Good morning, Andrew.
Plenty happening in financial markets.
Absolutely, been a big week, and roll up to Christmas is going to be quite fascinating.
Yeah, so plenty of data, plenty of nervousness in the market at the moment. We'll start in Japan. GDP number came out, a down number, which was expected, but a lot of issues in Japan at the moment. Tariffs,
Bond yields,
which are probably not getting spoken about a huge amount at the moment.
And a very weak currency.
Yeah, with those bond yields creeping up, that could cause all sorts of issues in the coming months.
Well, the unwinding of positionings, absolutely. You've got a Nikkei that punched through 50,000 with conviction. Now it's back at 48,000. And the velocity we've discussed from 48 to 51 was just unheralded. You've got all of those carry trade opportunities that borrow Japanese and naturally look for opportunity, not only currency but equity markets. Is that going to take a little bit of wind out of the sails? And are we going to see any form of intervention from the Bank of Japan once it nudges that 157? It seems to be an onward. It's onward and upward.
Yeah.
Because it's at 155.5 approaching 156.
Yeah.
We know that there's normally intervention approaching that 158 sort of 59.60 handle. And if you're looking at the chart, we've gone from practically parity all the way to 160, and now it's back at that 155.5. It's been, if you only traded one market, the yen was incredible.
Yeah, plenty of weakness there as well. And as you say, that carry trade, there's not a lot of talk about that at the moment. No. But if those bond yields in Japan continue to become more attractive,
yes,
then a lot of money may get repatriated.
Well, you would think that'd be the case if the Bank of Japan, Andrew, is going to increase rates. The bond markets, the bond rate's not going to go down.
No, not at all. So,
and how, are we only going to get one rate rise from BOJ, or are we going to get two? And that seems to be the situation. It's very fluid, and I think 26 is going to be a very dynamic year.
Yeah. All right, we'll move over to the UK. GDP numbers came out, which was a slightly negative number, but if we look at the chart there, it's been pretty weak GDP for quite some time.
Yeah, you bet. There's each representation there is a month, and that tells a story that what do the POMs do? Because you've got that's a stagflationary environment with high inflation, negative growth, and you've got very sticky inflation at 4%. We're saying that the food inflation, or I recall this going back to probably June or July, was said to mature in around mid-November to December, 6% for food inflation. So there's a lot of hurt on at Piccadilly Circus.
Yeah. It's a tough situation because you wouldn't think they would want to even think about putting rates up.
No, and equally, would you drop rates considering where this inflation target is at 4%? Well, it's 2 to 3%, but that's sitting at 4%. Does it warrant a cut?
Yeah, it puts these central banks in a pretty tough situation.
That is a classic textbook stagflationary environment, and I would think that inflation, unless you see dramatic move to the downside from an energy price perspective, if crude goes to 50, that's going to help. But I wouldn't be surprised first quarter that actually ticks up.
Spikes up, yeah. Not ideal.
No.
US, plenty of activity in the US at the moment. A lot of anxiety in the equity markets at the moment. Now the government has reopened, thankfully, but there's still plenty of data we probably won't see.
Yep.
So on the employment front, right, we're relying on private employment numbers at the moment to give us some indication of where it's at before the non-farm payrolls start rolling out again, which could be a month or two away anyway.
Yeah.
So, but nervousness there, the equity markets, a lot of that is around Nvidia. We'll report later tonight, our time.
Yep.
Will the tech rally continue is the question.
Well, the market doesn't want surprises. And as it rolls into Christmas, do we see a Santa Claus rally recommence, or does the wind get knocked out of the sails? And that's the issue. And Nvidia is the Wall Street's darling stock. I mean, 5 trillion market cap, who knows? Going into this a little bit further, we believe there'll be a September number that will be released to the market as far as non-farm payroll and CPI, but there won't be an October number. And when I look at the function of the unemployment, Non-farm payroll is the 15th of the month to the 15th of the following month, and then it's reported on the first Friday of the month. So the first Friday of the month, the next one will be first Friday of December.
Yep.
So there'd be nothing, Andrew, to report for November. So and then you've got a Fed chair that President Trump has said would like to have him removed in December for Christmas.
Yep.
So how does that roll? And then you've got Nvidia. There's a lot of big ticket items that are this nearly to the point of a perfect storm for Christmas.
Yeah. And the market's expecting not a rate cut to come up. So,
Well, that's interesting. 72% probability this time last week. Now it's under 50. So that's compressing. And I would say that by end of month, that could be well the case. And that's not what Scott Bessent or Howard Lutnick want, and certainly President Trump. They want 50 basis points.
Yeah. Which, well, they're not going to get 50.
And
likely to get 25. But
yeah. And so that's why
Yeah.
I think the roll up to Christmas is going to be very dynamic.
Yeah, for sure. And finally, not unsurprising, the VIX has ticked up over the last few days, particularly overnight on the back of, what is it now, 4 days of pretty nasty equity sell-offs.
Yep, bit of a washout.
Not massive by any means, because they were pretty much close to their all-time highs anyway. But it has been a bit of a washout, not only there, but obviously the crypto market as well. We don't speak about it a lot, but that's off nearly, 25% from its highs.
Exactly, 92,000 I think at the moment for Bitcoin, 221 or 222 for XRP.
Yeah.
But, when it's up 10% like that in a night, that's all geared as far as what's the storyline with Nvidia and if we're going to see a surprise. And if that was does surprise, I would think that VIX would angle up further and maybe you're going to take a 27, 28 handle out.
Yeah.
And when you look at that historically, that's over a year. You saw that Liberation Day early April when President Trump announced tariffs and it rocketed up to, 55 or 60. And then it's come dramatically down, and that's where volatility plays a part. And that's what traders need to be conscious of, the vol. What's happening and how quickly it can change the structure of a trade.
Yeah. No, well, you would think the way the markets are at the moment, volatility will
you've got to
persist.
Yes, and you would want to make one of the first markets that they should be looking at is that CBOE volatility index, because that tells a picture as far as what the S&P are doing. That's S&P 500 options, and so you need to be across that. US dollar index, and your favourite, I think, is still the 10-year bond. So look at those three, and then take on board what's happening from a currency perspective. You set everything up from a commodity side with gold, oil, and copper, and then look at naturally what's happening from the currency basket and how you plot your trade.
Yeah, plenty to keep an eye on.
I think it's going to be a very dynamic roll to Christmas, Andrew, because I think there's a lot of surprises that could materialise, and the market does not like surprises.
Not at all. All right, we'll keep an eye on all that. Any major statistics this week? I don't think there's any obvious ones, is there?
Well, I think the overall focus on the street is Nvidia.
Yeah.
That's what it's. I mean, 5 trillion. I mean, it's just it's beyond belief. A company can be worth that. I can't. I mean, it was only a while ago that Apple got $1 trillion, and I think everyone went, what?
Yeah. It's pretty extraordinary, really.
So. Yeah. So as you know, if things and no, there's no more.
No. And I think in that tech space, what's getting talked about a lot more now is the CapEx, which these companies are spending like just massive amounts of money
on data centers and everything else,
and power and chips and the whole thing. So when does that start to monetize? Now that could be years away, but they set themselves up, and the one thing in their favour is that they've got plenty of cash.
Well, yes, they have, and there's no doubting that. And also from an investment standpoint, Crown Prince Mohammed bin Salman met with President Trump today at the White House, and he's upped his ante from 600 billion investment to over $1 trillion. So that shows conviction and that's what the US needs.
Yeah.
They need big time investment, and something like a sovereign fund coming from Saudi is just enormous. So they obviously have an incredible friendship, and that friendship is going to be interesting how that plays into the crude market come first quarter.
Yeah, for sure. All right, plenty to keep an eye on, so we can regroup next week.
Look forward to it, Andrew.
Great, thanks, Pete. And that's the trading.com weekly market update.